Hey guys, and welcome to the Working Money Channel. XRP on the daily, guys, I got it up here $1.08, trading a little higher than yesterday, but not too much movement as you guys can see. Low volume, low volatility here. Price movement hasn't been anything really to write home about in the crypto space over the last couple of days now. Zooming out on the XRP chart though, right, we can see XRP still doing what it's supposed to be doing, making higher lows, right? Higher highs. We could even see XRP come down as low as 80 cents, I think, and we would still be in pretty good shape. Now, I'm going to draw a line here just to kind of demonstrate old resistance back here, 2018, late 2020, and early 2021. That was old resistance at around 80 cents, but I could realistically see this zone anywhere between 80 and the top over here, guys, right over here, the top of this supply zone from back in April of 2018. That's kind of where we're hovering right now. So if you guys take a look at that, that is around 87 cents. And you guys can see over here that wick did just dip down in and around that area. And now we're trading above that. But I could realistically see here, I'll zoom in one more time. I could see if XRP does dip down in this zone and, kind of trade sideways for a bit before takeoff, I could see that as a reasonable potential for XRP price movement over the next couple of months. And you know what, guys? I said months ago now that my bags were packed for XRP. I wasn't going to purchase any more. But this morning, I think I made the decision that if it does go below $1 one more time, I will purchase one more time in and around this zone if it does indeed come in and around this zone. I think I've decided I'm going to do that for a bit of a quicker turnaround. Just something, I do have some extra cash laying on the side. So something I thought I'd mention to you guys. Again, not financial advice by any means. That's just something that I'm going to be doing. BTC, guys, here on the daily, more of the same, just kind of chopping sideways. Same as XRP, same as the rest of the crypto space. So not too much price movement there. We did see that huge decline in price. Of course, if we go to the Dark Defender here, here's an example of a subcycle and a cycle. This is how XRP is targeting $2.60 to $7 to $13 to $20. When that date comes, I will use this blue pattern as a subcycle and calculate 103 to 256 under grand cycles. We will experience this together. So he is just demonstrating a larger outlook Elliott wave potential. So again, the number 2 over here, that second wave for Elliott wave going back down in and around that 80 cent level. Of course, that is just what I demonstrated over here on the chart in and around this zone here. And then finally up the blast off all the way up to $7.39, and then a correction from there, and then another one up to $13.13 according to Dark Defender. So that is a typical 5-wave structure just based on his fundamentals. The other thing that I think caught us off guard the other day was that pop in Litecoin, and we found out eventually that that news was indeed fake. Charlie Lee appeared on Bloomberg this afternoon to discuss a fake press release that suggested Walmart would use Litecoin. So just some takeaways with regards to that. Lee denied that the Litecoin Foundation was involved in the incident and said that neither he nor the project profited from it. However, he did take responsibility for the Litecoin Foundation's accidental role in spreading the story. So on Litecoin's Twitter page, they did tweet out a post saying that that they were indeed partnered with Walmart, and we soon found out afterwards that that was a fake news report. However, major news outlets were reporting it, like Reuters, like CNBC, but it wasn't true. And good for Charlie Lee coming out and mentioning that. Litecoin price did pop a little. Let me throw it on the hourly just to demonstrate what we saw the other day for Litecoin. A huge pop up here, about 40%, almost 40%, and then came right back down, trading in the $180 range. But you guys can see it did surpass a recent high of about $232 yesterday. 40% up. But then, of course, after the news broke that it was fake news, Litecoin came right back down. Didn't really affect much in the crypto space overall. A little blip on the radar when we're looking at the broader picture. Guys, this is also a big day. Another day, SEC versus Ripple in court hearing update. So today is September the 14th. This coming from XRP Rose, tweeting out Stetus's timeline here. So for today, the SEC's publicly available limited redacted or moderately redacted letter brief. This will be concerning the allegedly privileged documents the SEC is withholding. The unredacted documents are being delivered to Magistrate Judge Netburn in physical and digital form on that day. So This is the day that the judge will receive the forms. And, some of us wondering if we are going to get any verdict out of this today. Gary Gensler is supposed to also be doing a talk today, and that could in fact affect the entire crypto space. Well, I also saw this from Michael at Val5 Links. Apparently, Robinhood is targeting crypto investors with the launch of a new commission-free feature on their trading app. So maybe in a last-ditch effort to gain some clients, trading platform Robinhood is rolling out a new feature that allows crypto investors to buy digital assets commission-free on a recurring basis. The firm behind the popular trading app says that the feature enables investors to regularly buy coins for as little as $1 on a daily, weekly, bi-weekly, or monthly schedule. This is an interesting feature. Just yesterday I did a video, and in that video I featured a clip from Raoul Pal talking about cryptocurrency as possibly the next, or rather the one opportunity that millennials have in order to accumulate wealth. He talked a little bit about the baby boomers and how they had, a lot of opportunity to accumulate wealth through the 80s, 90s, so on and so forth. But the millennials have really just been kind of dealt a raw hand. Well, he talks about crypto and how, even if you have to cost average down, this idea that, stick to a plan, have something that you can kind of fall back on, have a savings, and invest it in crypto, cost average down as the market is going down. Well, this is kind of the same idea here that it sounds like Robinhood is rolling out. $1 a day or $1 a week, bi-weekly or monthly. You can obviously change this amount as you see fit. The new feature introduces dollar cost averaging, which involves investing money gradually at regular intervals, regardless of the price of the asset. The strategy can reduce the impact of price fluctuations in a volatile crypto market. And so they've gone on the record, and here's a quote, guys. Saving is a habit, and recurring investments introduce a strategy to grow holdings over time while potentially reducing the impact of market volatility. The crypto markets can be volatile due to the nature of the industry. Investing on a regular basis or recurring basis can help you focus on long-term growth, reduce risk, and reduce the stress of timing the markets. The company says its new crypto recurring investment tool will be a more efficient way to gain exposure to digital assets. Robinhood says they are rolling out the new feature to all customers this month. It also kind of takes away from this idea of cryptocurrency as a crazy casino that the kids want to gamble at, right? We have this view of cryptocurrency, and it has been this way for a while, where, you throw your money into this coin and it could pop, it could not. You could make 100x on a certain coin, you could lose 95% on another coin. At the end of the day, I think what Robinhood is doing here is putting it into the psyche of their clients, of their customers, that this is not a casino, this is an investment tool. You can be responsible, and we're going to give you a way to invest over time, dollar cost average, same as Raoul Pal mentioned. And if you guys didn't catch that video, I'll link it up here in the top right-hand corner. So interesting because we know what's coming down the pipe. The SEC really kind of on a tear right now. We're all waiting for what Gary Gensler is going to say today. Here is a preview, I suppose. Is from Michael at Val5 Links. Yeah, right. I've suggested that platforms and projects come to talk to us. Can you believe he actually said that? So this from Forecast, SEC chair reiterates call for crypto platforms to come in and talk to us. I can't believe he has the audacity. So ahead of the U.S. Banking Committee hearing on the oversight of U.S. Security and Exchange Commission today, Gary Gensler reiterated his call for crypto platforms and projects that have securities to register with the agency. So here are some fast facts. In prepared remarks, Gensler emphasized the concerns he sees over the lack of investor protection in the crypto industry. Currently, we just don't have enough investor protection in crypto finance, issuance, trading, or lending. Frankly, at this time, it's more like the Wild West, or the old world of buyer beware that existed before the securities laws were enacted, Gensler wrote. This asset class is rife with frauds, scams, and abuse in certain applications. And so with this emerging cryptocurrency asset, this new digital asset, a new asset class, you would have thought perhaps that the US government would have worked with it over the last decade. I mean, let's not forget, Bitcoin has been around for over 10 years now, and nobody did anything at the government level. So now, there's this rush, this scramble to, regulate, oh my goodness, we don't have time. You guys are pathetic. You should have gotten on this sooner. Now there's a mad scramble. Nevertheless, Let's keep going with Gary Gensler's remarks. I've suggested that platforms and projects come in and talk to us. This is what he said. Many platforms have dozens or hundreds of tokens on them. While each token's legal status depends on its own facts and circumstances, the probability is quite remote that with 50, 100, or 1,000 tokens, any given platform has zero securities. So Gary Gensler saying that probably you have a security on your hands. Gensler wrote, "Make no mistake, to the extent that there are securities on these trading platforms, under our laws, they have to register with the commission unless they qualify for an exemption." Another point, the SEC is working with the Commodity Futures Trading Commission, or the CFTC, on stepping up investor protection in crypto, as well as with other agencies, the Federal Reserve, Department of Treasury, Office of the Comptroller of the Currency, and other members of the President's Working Group on Financial Markets to develop policy frameworks for crypto. So that's a bit of an update. Caitlin Long, founder and CEO of Avanti Financial Group, said in a tweet, "Tone is negative, more so than his previous remarks. Something else interesting, instead of stable coins, he's calling them stable value coins. Stable value funds are SEC regulated." So something else noted by Caitlin Long here. Sidebar, she was a former Ripple employee, now the CEO at Avanti Financial Group, as I had mentioned. Gensler has hinted at regulation around stablecoins in the past. More recently, Gensler, speaking before the European Parliament Committee on Economic and Monetary Affairs on September 1st, said in July nearly 3/4 of trading on all crypto trading platforms occurred between a stablecoin and some other token. Thus, the use of stablecoins on these platforms may facilitate those seeking to sidestep a host of public policy goals connected to our traditional banking and financial system, anti-money laundering, sanctions, and more. Couple more points here. The crypto industry in the U.S. has been under growing regulatory scrutiny, as we know. Gensler's comments follow the SEC's recent warning to NASDAQ-listed Coinbase. So we're going to talk a little bit about all these other lawsuits that are potentially looming over some of these other cryptocurrency-based companies and how the SEC has been ramping those up. I think it's all tied together. Gensler's comments follow the SEC's recent warning to NASDAQ-listed Coinbase, the largest cryptocurrency exchange in the U.S. by trading volume, over its high-yield crypto lend product, which the agency says involves a security according to Coinbase. So there are these lend products. There's also obviously the Uniswap story too that I mentioned a few days ago in a video. I'll link it up here if you guys didn't catch that video. Investors in the crypto industry alike have been closely watching the SEC versus Ripple lawsuit, currently in the discovery phase. The SEC has alleged that Ripple's sales of XRP tokens were unregistered securities. We know about all that, blah, blah, blah. So this just talks about the Ripple case. I'm not going to go into more detail about that. Just wanted to mention some of these talking points that Gary Gensler mentioned yesterday as a prelude of what is going to happen at the oversight of the U.S. Securities and Exchange Commission today at the U.S. Banking Committee's hearing. So I'm going to keep you guys updated on all the developments there. BondCrypt XRP also posted this, and I think that this is of note, guys. This is coming from SEC.gov, the SEC's official website, and this was a press release just from yesterday. The Securities and Exchange Commission today charged New York-based GTV Media Group and Soraka Media Group and Phoenix, Arizona-based Voice of Guo Media, Inc., with conducting an illegal, unregistered offering of GTV common stock. The SEC also announced charges against GTV and Sakara for conducting an illegal, unregistered offering of a digital asset security referred to as either G-Coins or G-Dollars. The respondents have agreed to pay more than $539 million to settle the SEC's action. So it doesn't stop at Ripple. It doesn't stop at Coinbase, nor does it stop at Uniswap. They are going after everybody now. And this is an interesting development, guys, because this shows the SEC's hand. And I think this ties into these next couple of clips quite nicely. I saw this on Twitter from Jeff at ISO_XRP. This was back from May of 2019. Nancy Wachtas of Cooley, they are a law firm. And this is what Jeff says. What the SEC does is go after what Nancy would call the weak links, the companies that don't have the money to fight them. And so these are a couple clips, a few minutes long. Listen to what Nancy Wachtas has to say.
So first of all, they're doing through their enforcement program, they're doing that in effect. They've only targeted certain companies. They're not going after 2,100 tokens. And for them to take on all of this with, 40 people in the crypto space at the SEC, I mean, I don't think they have the manpower to do it. So in effect, they're doing that. What they've tried to do is they went to what I would call the weak links, companies that didn't have enough money to fight them. So it is a very scary call to get. If I can remember the call I got on one of my clients. They said, gee, we heard you were representing X. And I said, oh, how'd you hear that? Oh, the Canadian regulator. Thank you, William. So they, and said, thank you for the call. We'll get back to you. It's frightening for entrepreneurs to get that call. And, no one wants to think about spending all the money that they have to. One of my clients has spent $5.5 million over the course of 2 years responding to document requests, testimony. They've had to reimburse, through indemnification of their board members, some of their investors. And it's a lot of money. There's still no lawsuit. And we've been pretty transparent. There's something called a Wells notice. You'll get a call from the SEC saying, we're going to sue you.
So back in 2019, Nancy Watchess on this panel discussing how the SEC was approaching this, going after the weak links. Now, we know since then they did finally attack Ripple. Let me play you guys the second clip here real quick.
Or we're making a recommendation to the commission that they authorize an enforcement action. Many years ago, there was a process put in place because people who were targeted felt that the commissioners really didn't hear their case. So what you do is you submit a Wells submission, and that Wells submission puts your case forward. So my client elected to make that public. They wanted to be transparent, and they wanted, the community to understand why they felt this was so important to the community. The SEC still hasn't taken action. We're still waiting on that. But again, Rob, I think that they do that in effect anyway. They had this mosaic in mind, so they went after the weak links. Then they wanted to go after somebody that did a really big offering, big being, $100 million. And then I'm aware of other investigations where there were even larger.
Okay, so aware of more investigations where there were even larger, fish to fry, I suppose, more at stake there. So this is obviously from a conference, again, back in 2019. But I think the point here, the SEC, they had a plan going after the weak links. Then they would kind of shift gears, of course, enter, the year 2020. A lot was going on in and outside of the crypto space. And by December, it was Jay Clayton who finally announced the lawsuit against Ripple and XRP, suing the company for selling what they allege was an unregistered security in the form of XRP. The sales of XRP between certain years, I believe it was 2013 to 2018. And now we can see the SEC has actually kind of moved on with their plan, right? Now suing what seems to be everybody under the sun. So this was just, again, back to this release, this was just from yesterday, suing these media companies for conducting an illegal unregistered security offering via common stock, but also via digital asset securities referred to as G coins or G dollars. We know about the Coinbase thing. We also know about Uniswap. Well, I saw this guy's from DM Logic, and I haven't heard much from DM Logic as of late. I really am missing the videos, buddy. Anyway, he says, well, of course, this is why. Imagine having a monopoly on profits because of the legacy systems that are about to be taken over by this new technology. I assure you, they are pissed. It's exactly the reason why Ripple is being sued. Retweeting out this political cartoon here by Plan C 1 trillion sell on Twitter. And Plan C states, just finished a really great Bankless HQ podcast. According to Cathie, meaning Cathie Woods, the banks are beginning to feel it. Is this why we are seeing weird regulation talk around the lending and borrowing space? Perhaps some big influential players can't and don't want to compete. And so guys, these are the powers that be that are trying to thwart the plans, not only in Ripple's case, But now the crypto industry is getting so big, so robust, a lot of these projects are so well developed now that it is a force to be reckoned with. And, at the beginning, I think even as far back as December 2020, when Ripple was that first kind of big fish that the SEC was going to nail, I think since then we have seen so much development and so many more new influential players in this space. And luckily for Ripple, they had the money to keep themselves afloat and projects continuing to grow. They are a $10 billion company after all. They were just the big fish, but now we are seeing smaller fish get even bigger throughout 2021. And now the SEC's got to decide. So they have decided they're suing Coinbase, Uniswap, a handful of other companies that have dealt in allegedly selling illegal securities through the form of digital assets. And so, banks are feeling the pressure, especially with this idea of decentralized finance, lending your cryptocurrency, like in Coinbase's case. So I didn't actually watch this Bankless podcast, but there is a clip down here, guys, of the podcast. And the person who was interviewed here, guys, is Cathie Woods. So Cathie Duddy Woods is an American investor and founder, CEO, and CIO of ARK Invest, an investment management firm. And you can see even just within the last day, Cathie Woods' ARKs grants itself power to buy Canada's Bitcoin ETF. So this is in the news just within the last 24 hours or so. Cathie Wood was on this podcast. Listen to what she has to say.
We're actually not sure that the banks are actually worried about it right now.
Oh, I think
they are?
Oh, definitely. I think part of the regulatory heat that is taking place now is because the banks are beginning to see how much this is going to hollow them out.
Oh, how much this is going to hollow them out. Banks obviously have a lot of lobbying power with Washington. Gary Gensler trying to do his best to help protect the broken system that we all want eradicated and replaced with cryptocurrency, DeFi, and other DLT blockchain technology. I'm going to play this clip one more time just for fun.
I think part of the regulatory heat that is taking place now is because the banks are beginning to see how much this is going to hollow them out.
Just her expression too, right at the end of that. Be afraid, banks. Be very, very afraid. That's just my opinion, Cathie Wood's opinion. But I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.